It's the new 106.7 My Talker Radio. Now, back to a kinder, gentler Curtis Wright on the beat.
Well, there's always the hope. It is 7:05 across southeastern North Carolina. It's Monday morning. Sun's up. It's going to be a hot day and humid across the entire region. Watch yourselves. A Bermuda high coming in, says the National Weather Service. And I hope you had, with your family and friends, extended family, a great and a safe July 4th weekend. It's good to be back, and it's good to have in studio with us once again, talking about capital funding for businesses, setting up and creating, I should say, a capital funding infrastructure, as he calls it, talking about crowdfunding, and, you know, what businesses, technology, and otherwise we should be focusing on here in southeastern North Carolina. Thomas Vass is with us. Good morning, sir.
Hey, Curtis. Thank you for having me on your show. I appreciate being here with you. Earlier, you were talking about changing the status quo, and when we talk about economics and technology, we have to do something to change the status quo of economics and business. Otherwise, things, they don't just stay the same in economics, they go downhill. And so in terms of technology and innovation and commercialization of new products, one thing that we can do to change the status quo is create new types of business social networks so that people can meet each other. A lot of innovation is not in the laboratory. It's not in scientific research labs or anything like that. A lot of innovation, and particularly with existing companies, is because people meet with each other and they talk about doing new business, new kinds of business relationships. And when you do that, that's how you change the status quo.
Well, when you look at the history of the age of technology, if you will, at the end of the 20th century, a lot of these folks who created these companies that they became bajillionaires, and we saw innovation like never before in the history of the United States since maybe the Industrial Revolution. These folks were college kids hanging out in their college dorms. You know, and they were basically, that's what they were doing, networking. Well, what about this? I got an idea. What about you? So, I mean, there's where a lot of these businesses started in the field of technology, and it also comes from, you know, just students have been at these large universities, you know, involved in some sort of research or something as well. So, you know, taking that out into so-called the public and doing it is what we do need to mark. You know, look, I've been in business for, what, 38 years now, and it's always been about people sitting down together in your industry or in related industries and talking about, you know, your vision, your dreams, what you want to do, and the other person says, well, that's a great idea, how can I help you? Or people coming together with the resources and having a lot more resources to take a vision or an idea forward.
And it's not so much that you have to be, you have to have a lot of infrastructure or government support. You just have to understand the whole deal pipeline. You have to understand that there's people that come up with ideas, and we call that deal mapping. There's people that come up with deal creation, which is putting the deal together. There's deal funding, and then there's deal exits. And that's what we've got to get to here in the Cape Fear economy. We've got to get to a whole structure of understanding how companies get products in the marketplace. And it's not simply new products or new companies. It's existing companies that are trying to get new products in the marketplace. We've got to help those companies get funding.
Well, you know, this is what we keep coming back to, and it's a failed, like, I think what you're saying is, I'll put it in my own words, it's failed, and we've talked about this for a number of years now. This whole concept is failed, and why is it failed? Because the government bureaucrat's mindset is not the same as an entrepreneur's in the private marketplace. Their mindset. It's a different, completely different mindset. When you talk to bureaucrats inside the government, they don't understand why you criticize them or say that. But it's not. That's why you're there.
There's a whole beautiful economic theory by a fellow that used to be up at George Mason named James Buchanan. It's not so much that the government agents distort the political process. What they distort is the pricing mechanism in the marketplace by inserting political incentives as opposed to pricing incentives. That's what we call in economics an externality. The politicians get themselves involved. They should not be involved, especially in the capital markets where it's the most detrimental capital in terms of interest rates and distorting the marketplace. So the politicians, when they get involved with economics, is terribly defective for helping the companies grow and get capital.
Yeah, and I don't, want to go down this road. We have, we're not sitting here today to sit and start out by bashing government, but look at the so-called green initiatives.
Right.
That's a perfect example. Billions of dollars. Now, forget the politics, okay? But here is a group of bureaucrats who had unfeathered authority to do whatever they wanted with taxpayer money. And how did it come out? Every one of them was a total disaster.
I have a story for you. Down in Calabash, where I live, there's a outdoor equipment company. He's got a bin sitting on his service desk full of carburetors that have been destroyed by the ethanol additives. It was a terrible idea, terribly backwards idea, and that's what happened when the government got involved.
And the other thing about, we've talked about a lot, I call them checks and balances. They're the things that make the free market work. And that is, the person who has an idea goes out and talks to a couple other people about an idea. Well, that doesn't mean just because it's a good idea that it will be successful. We all know that. There's that whole part about taking a risk. That if you wanted to go by a bureaucrat's mentality where you line everything up in columns and you add up the columns and then if it equals that, no. We all know that the greatest ideas are by people who took the greatest risks, and if you sat back and looked at them, usually we do, in hindsight you go, man, that person was crazy, but look how it turned out, right?
Exactly right. And what's so interesting about that and taking risks is the government and the politicians are terribly averse to taking risks, and so are large corporations. One of the things that we've got to get to is to allow entrepreneurs and small companies to take the risks, and the risk premium, what we call the interest rate or the rate that we judge profits by, judges for the market what is risky and what potentially is rewarding. And the reward comes down the road in the future. And this is why the rule of law in America is so important. The rule of law, which is not codified law, it's just what we believe in each other. In order to get paid on an investment, in order to get paid in the future on profits, you've got to have the rule of law long enough so that the entrepreneurs and the companies and the investors can get their gain.
One of the things that worries me about, and I've thought about what we've been talking about, and you again mentioned here this morning, deal mapping, deal creation, how do we fund deals? What's concerned me about where we are in the country, not only government, the level of government invention, but I'm talking more about the inavailability, if you will, of capital in the sense of, can people who create wealth, what is that level of risk they're, realistically able to take today?
It's not. One of the things that's happened, we passed, or the Congress passed the crowdfunding, but the SEC put so many burdens, so many, that you can't take the risk. You can't get the capital, you can't take the risk because the future is so uncertain, and business people are not going to take a risk when the future's uncertain and they may not get their reward.
And the crowdfunding is about getting almost anybody involved. Anybody that wants to get involved in helping create and fund businesses. But if they don't have the money to do it, the disposable income, if those who create wealth are trying to preserve it and protect it against this uncertainty and the volatile marketplace, that's a great concern to me. And it really is, because once you stop, or cut that down, say it's diminished by 30%, 40%. Well, my gosh, we already know that the statistic is that this period in which we're living, the least amount of new businesses are being created than any time in our history.
Right, and that's terrible. It takes 3 to 5 years for a company to start adding workers after an investment, so we're way, way behind the 8 ball.
Yeah, if we're not repopulating and we're not, like you said, then there's that lag time.
Right.
How detrimental is that going forward? We'll be back with Thomas Vass. We have lots more to talk about here on The Beat. Cape Fear, Capital Connections. Don't forget to follow us on Facebook. All kinds of links there, and we post every week. These slides are talking points that Thomas brings us. I'm Curtis Wright. We'll be right back.
Please stand by for for a very important announcement.
Curtis Wright is on the beat.
You are out of control.
The new 106.7.
That's beautiful.
My Talker Radio.
We're back live here on the beat. Cape Fear Capital Connections with Thomas Vass. Talking about capital funding for businesses. Crowdfunding is one of those we're continuing to talk about. And talking about networking between those out there in the, if you will, the private sector and those who are either in companies or wanting to create companies, expand companies. And that's a big part of what you talk about a lot is this networking. You know what I really, just as an aside, one of the things that I see also, I want to move from these quasi-government private sector organizations that are out there and set up across North Carolina. They're more like little clubs. And I don't think they do anything. I think that they are groups of people. The chambers of commerce sometimes are far too into this experience, and that is, let's get together, let's have a big luncheon, let's have somebody preach to us, now we'll all go home and have a good time. Well, they're totally ineffective as far as what you're talking about. What you're talking about is creating an environment within the marketplace of people, you know, working together at all levels. And I can tell you in this marketplace, at a certain level below the top, say 1 to 5%, they don't work together, and the other group of people feel like, well, we're not part of the club. Well, and that's not good, I don't think.
Right, exactly right. And the focus, the reason that the new Cape Fear Regional Capital Exchange will be better than the existing organizations is because it's targeted on helping companies raise capital. The end goal is not just to come together and feel good and, you know, have a business,
right.
a social,
have a beer,
have a beer.
Get some giveaways.
The goal has to be directed towards helping companies raise capital. We need every quarter, we need 3 executives to come and tell the community what it is that they're going to do with their company and what it is they're going to do with their capital. And we've got to focus on the end goal, and the end goal is getting them capital. It's not just to have a good time or drink a beer.
How do though, you know, there's 2 things that have gone on that I think have been so detrimental. One of them is, of course, a focus on government incentives, government this, government that. Then there's the other part of it, which I don't believe, you know, creates a long-term infrastructure that you're talking about. It's short-term, it's in, it's out, it's hit, it's miss, it's drive-by, and I'm talking about venture capital. Venture capital is short-term in my mind,
right.
and I don't mean this, you know, for people who are venture capitalists, that's fine, but to me it's a very selfish type of thing. I need to get a certain pop, I'm in, I'm out. Right. Whereas what you're talking about is really not, is funding in a way that creates this stay involved attitude for the long haul.
Right. The big difference, for example, up in Raleigh with the Council for Entrepreneurial Development, the big difference is that got captured by the special interest venture capitalists for the short term. And they were trying to commercialize technology out of the universities and get the quick hit. What we should have done up there and what we should do down here is we should have an ongoing, sustaining organization that takes good care of the Cape Fear economy, takes good care. We need to see our companies as a very valuable economic resource and do everything we can to help those business owners get capital. So the difference is that when we speak of capital, it is a great, huge universe of capital. It's not just venture capital. Venture capital represents about 1% of all the private capital that's out there. And so we've got to look at our investment bankers. We have to look at our asset-based lenders. We have to look at broker-dealers. We have to look at every component of the private capital market and put that in place down here in Cape Fear. The goal of all of this is to create the very beginnings of what I would call the Cape Fear Stock Exchange, the private stock exchange, so that we can have an ongoing, continuing source of capital to fund innovation and expansion. And the point there about the social business networking is the greatest ideas, the greatest technology ideas and commercialization of products, the greatest ideas come as a result of that social business networking. It doesn't come out of the labs. It comes because people just meet each other. And so we've got to put that into place. And the point that I would make with you is that it does not require tax incentives. It doesn't require the politicians to get involved. It's just good business people getting together on a quarterly basis. Everybody knows that that's going to be a good time to go and listen to what the companies are talking about, and then move forward with the capital market resources so that the companies can get funding.
The one thing about the crowdfunding that, and you and I have talked about this off mic, is, and I've talked with some other folks that have been involved in crowdfunding, is, it's kind of weird. I could go out right now and say, I want to invest in a home for real estate. And the market, as we know, is very risky, very risky. And, but I could go do that by just signing some papers. Nobody's going to say, well, let me do these percentages and let me do that. If I wanted to take $125,000 and just go, whoosh, go out. If I wanted to go buy a $65,000 car that I thought was, well, it's kind of an antique, maybe it'll be worth some money, I can just go sign some bunch of papers. I can do dozens and dozens of things like that with my money. But then if I want to go and say, well, I just want to get together with a group of people and I'm just going to, go crowdfund, okay, in North Carolina. Well, oh, no, you can't do that. You got to talk to the FCC. And it's like, what are you protecting us from? I mean, there's other much more riskier things we do on a regular basis with our money than that.
Right.
And I don't understand. I said to one person, why is it that there can't be almost a form that you can fill out and you give it to somebody instead of having to be this only the accredited investor that's got $1 million beyond the certain assets,
right,
and all that. I mean, it really limits the capital availability.
We need to do two things up in Raleigh with our state Secretary of State who regulates securities. We need to pass something called the Intrastate Capital Act to allow North Carolina citizens to invest in North Carolina companies. We've got to exempt ourselves from the U.S. SEC regulations and free up our citizens to make those investments. And two, like we're doing down in South.
And by the way, not to cut you off, but other states have done it. It's not like this crazy idea that you've come up with or somebody. No. Other states, Georgia. There's states that have done this.
A lot of states have done it, and we're lagging behind. What we're trying to do down in South Carolina is have a disclosure document, just like you do in real estate. Right now, you buying a piece of property, and the real estate broker hands you working with a real estate broker in North Carolina, and that's a disclosure document. We need to have something like that regulated by the North Carolina Secretary of State so that everybody that's involved with a crowdfunding project understands what the rules are, understands the risks, and it's full disclosure, it's fair disclosure, and that's the way you protect the consumers.
And it can be that easy. I mean, I've looked at this a couple different ways, especially, like I said, some other folks that have been involved. And one person actually said to me, wow, yeah. And I said, well, yeah, I don't understand. After listening to all you guys talk, why has this not been already done in North Carolina? I just don't understand it.
Well, a lot of it is because there's this paternalism. We've talked about paternalism in government, where they think, or the people in government think, that the citizens are too stupid to make their own decisions. The former commissioner of the SEC held up all of crowdfunding, accredited investor and non-accredited investor, held it up for over 12 months because she didn't want to move forward on implementing it because she had a paternalistic attitude, and she substituted her own opinion of what was good for America for the Congress, and that's not the way this country is meant to operate.
Now, there's special interest involved too, right, that are holding this up. Mm-hmm. And is that because there's money to be made keeping the status quo?
That's exactly right. In anything like what we're talking about, there's a lot of special interests that are trying to keep the status quo. Before we go, I just want to do one thing. We've got a really good technology stock called Psychomedics. It trades under the symbol PMD, and I hope that the listeners will go and look at PMD this week.
Psychomedics Corporation provides testing services for the detection of drugs of abuse through the analysis of hair samples in the United States. Check it out, PMD. Now, look, all of these slides, again, will be up on the Facebook page, as well as, don't forget, these interviews are all taped, and they're up on our virtual channel, the new live stream channel, Cape Fear Capital Connections. Thank you, Thomas, for being with us.
Great. It was good to be here.
I'm Curtis Wright. We'll be right back with Representative Chris Millis. Lots more to talk about on The Beat.